All right, guys. Another educational piece regarding levels, um, compounding, and positioning, basically, and how we should position these into the context. Let's get to it. So first, the most important thing above everything else is the context. So in what context are we doing our analysis? Okay, that's very important because even the patterns, for example, like this, they may change depending on the you know not every triangle break up like this. Sometimes they fail, sometimes they break down. So that's why context is really important. And what do I mean by that? Let's say you want to trade lower time frames, like 15 and below. Okay, 5 and below can be. But the context, let's say you want to position yourself, you saw this happening. Okay, it deviated below the range. First of all, we just established the range. Okay, this is our range. The high is taken out, low is taken out, and then it deviated below and got back into the range. So what does this tell us? This tells us, first of all, we have all these untouched liquidity here, right? Build up of liquidity with every high, untouched, and we have the range reclaim. So our direction should be, even if we're trading in the lower time frames, our direction should be upwards, potentially towards here, right? To the range highs, because we're ping ponging inside this level. First target obviously is the mid range, and then the range high if it's flipped. Okay, so that's, let's put this in our pockets and move on. So our context is we're looking to long every pullback. Okay, and what happens here? What happens here? Eh, there's not one way to do this. So depending on your system, if you're a trend trader, like using EMAs, VWAPs, some other bands, Bollingers, whatever you're using, basically the idea here is, you know, of course, combined with the price action. Now we have the structure break. We have another low created. You can take this invalidation there. And as you see here, the structure isn't broken. It just took out the low into this cluster here before the breakout. So which means it's a demand zone right there. Either you grab some here, and when it closes above, and you add the position like that, and that's a take profit. Okay, maybe TP1, TP2. Okay, and then again we're looking for a pullback to where? The resistance that was broken, that is flipped. So you enter there, or you wait for this to break. Your invalidation is here, your entry is there, and then when you see here, it's a high low, right? Although the wick is here, but it's a high low at the end. You can add more, right? It's super simple, super simple. You don't need so many indicators. Or if you're trend trading, again, mark your levels. Whatever you're trading, mark your levels. Levels are the most important. This is our level, okay? Again, it's established support broken, deviation, and then reclaim, another test, and then boom. So levels are important. And what else we have? We have this EMA cloud here. You see the gray one. So basically, if you're not comfortable buying this, which you should basically, but let's say you enter some here, and then once it reclaims the trend, which is the gray cloud, then you can add more. Okay, so that's a trend trading strategy basically. But again, all these levels are extremely important. Levels are the first, always. Levels above anything else. Okay, so our direct why are we longing this? Why are we looking for reasons to long? Because our context suggests that now we reclaim the range and there is a potential for another attack for towards the range high, mid range and range high. That's why our context is to the upside. And what happens here? We finally reach the destination. We're gonna either break out or start rejecting here, okay, and go back to range mean. So basically, what we're looking for is here is either weakness or strength, right? As we always do. But our long bias on the higher time frames is gone now until we see the strength in the lower time frames. So let's analyze this situation, okay? So at this point, we know that this is range high, and these highs are diverging right there, okay? So that's an exclamation mark. Okay, that's no strength. Then we can start looking for entries, exits, and look for opportunities to compound on the way down. So we know that these highs, across these highs, there was divergence. Now, as we see, this low has been broken there, right? As you can see, again, levels. This low has been broken. That was the low, and then this closed below everything. What forced this to close below? Then you can use either supply demand. This is the supply that pushed the price down. And again, we have another structure break which broke the level also. And then that's another supply right there. Okay, and it just hit the supply and sold off. But what I want to show you is another level trick. Just a sec. This is another from another program. It doesn't stick. Okay, that was an important level. We deviated below, right? And then we squeezed. You may think that, it's a good way to long. It's a good area to long, but the context suggests that we are printing higher highs, higher lows, and that's why this may not be the case that we're looking for. So because I know the context and because I know this area sent the price down, I'm expecting some kind of reaction at this area. So instead of trying to long, I'm looking for shorting opportunities since here, because we have the structure break. Now we have a low high and another structure break. So basically, even if you took the divergence on the 15 minutes and your invalidation is here, now it's your time for a compound position you add here. Okay, and now you can move this stop to there. Okay, now you offset some risk and you add it to the position. Now the same thing happened. Structure break came back up. I'm looking for shorts. Remember, context. So I short this again there, and now I can, let me just put this level and have a clear one. So basically my risk is here now. That's another entry. Now I enter again, and now I can use this one as my, and I edit the position. Now I move the stop here. And what happens here is strong level, deviation of the level, deviation of the level, right? And now when the level is lost, you add more. Now you can move the stop to there. See, I have a reason now, because when price, does this, does that, does that, and this, it means that it wants to go down. So that's where you want to actually, you can size up here because it shows you that price wants lower. Where should it go? There's good targets here. Oops, sorry. I need these. There's good targets here, lows, okay? And after that, there is this mid range. If it starts breaking down from the mid range, then you can look to play to these areas, okay? And ideally this one. But until this happens, now what we're looking for is we're stuck in this range, right? Now what we're looking for is it going to break down, or is it going to run this, create some sort of divergence here, and reclaim? Then we should be looking for longs again. Okay? Does it make sense? I hope it does. Always remember this strong level. If the context is to the downside, bounce, bounce, bounce somehow, and then trade, and then squeeze so much participation, and then lose the level again. Like exactly like this. That's what we're looking for. Strong level, squeeze, come back down, squeeze again, trap traders here, and then sell off. When the traders are trapped, the move should be fast. Okay, that's the idea. When trapped, there is enough trap traders, the move should be fast to the downside or to the upside. And that's where you want to, that's this is a higher probability trade at this. So if you ask me which is the higher probability trade, this trade that you took here at this point, at this breakdown, is the higher probability one, because that's a strong level. So that's how you can compound, and that's how you can move your stops, because you have a reason to do so. You just don't move, stops just because the price did this. You cannot move the stop. But if it does this and break another structure, then you can do that. And then if it does this again, then you can move this. And if it does this, you can also add here and then move the stop there. Okay? See, every time I open a new position, I move the stop and risk make offset these risk, and I have always start with a fresh new risk. If it's 2%, this is 2% risk, because I'm offsetting these by moving the stop. I have a huge position now, but still my risk is 2%. All right, guys, I hope this helps, and please ask me if you have any questions. Cheers.